few weeks ago, I made a video, and the video was entitled Start Selling Your Altcoins Today. Now, in that video, basically what I said is that you should start selling your altcoins and start preparing for a correction so that you got about 30% in cash when the correction actually comes. Now, in that video, what I also did was I actually marked some charts, and I said that if we start selling when Popcat was at 195, then you'd get an opportunity to buy it a lot cheaper. Just have a listen to this. Over here is today. And I bet you that we're going to have a dip, which is going to send the price way below, way below this dip over here, right? I don't know if it's going to go up first. Maybe there's another 10% up in Popcat. Who knows? Maybe 20%. But I bet you that we're going to go below this level over here. And I bet you that if you take Radium, we will at some stage be below the $5.70 level. Why? Because the RSIs are high, the retail is here, the momentum is crazy, right? And so I know at some stage, I don't know whether we're going to go up to $7 first, but I do know at some stage we're going to be below this level. Same thing with 𝗏𝗏, right? I look at 𝗏𝗏 and I say, look, I want to get into this, but I know I literally even marked the charts, and here are the charts that I actually marked. I said here at 195 that you would get an opportunity to buy Popcat again cheaper, and now it's trading at $1.14. Same thing with Radium. I marked it here at 590, and you got an opportunity to buy it yesterday at $4.19. And so this is exactly what I laid out in my thesis. And at the time when I laid this out, obviously I got a lot of hate in the comments. I got tons and tons and tons of hate in the comments. If we scroll down to the comments, you can have a look here. Good luck selling. I'm not selling. Actually, now's a good time to buy. Stop the clickbait, please. What the fuck? This just makes me want to unsubscribe. Some terrible advice. I really hope this person did unsubscribe. 𝗕𝗢𝗙𝗙𝗚 said he did unsubscribe. And so we need to expose this guy, seriously. And so the abuse mounted up. But despite all the abuse, I didn't give a shit. And I carried on with my conviction. I kept saying to you guys, yes, we are maybe going to go slightly up, but I'm not buying this market thing. And I thought that there would be some kind of altcoin correction. Yesterday, again, I made a video, and in that video, I laid out my thesis for the bull market, and again, the abuse kept coming. You can see that the abuse kept coming. Now, you got to genuinely, who takes this guy seriously now, etc., etc. Anyway, here we are today, and we've had an altcoin correction. Most of the altcoins are down 30 or 40% since I made this call over here. This Popcat, incidentally, is about 50% or 40% down since I made this call over here, and that's what happened. Anyway, then again, last night, I went into Frontrunners, and in Frontrunners, I said, guys, in general, I'm super bullish, but there's something that's really worrying me in the market. I wouldn't panic right now, and I'm not sure it's going to happen immediately, but I'm accelerating my move into cash, not selling any of my long-term bags, but reducing the excess leverage and saving cash for the dip. No need to panic. I will break it down tomorrow on the morning call that we do with Frontrunners. And again, about an hour after that, the market went completely red, and I again went onto Frontrunners and I said, wow, I didn't expect for it to happen so quickly. I didn't expect it to happen so quickly, but we actually got this big liquidation. And now, while a lot of people are telling you to buy the dip, and that it's time to buy the dip, I'm not convinced. And I'll show you why I'm not convinced, because I think there's something in the market that's really worrying me. And I'm actually, when I look at the market structures, I'm much more worried than I am before. And I'm still very long-term bullish, but there's something that's worrying me in the short term. And I'm going to show you what's worrying me and why I'm not yet buying the dip, but I'm going to show you exactly what I am doing. So a longer introduction than usual, but I just had to get that off my chest. And yeah, let's get this show on the road. It's okay. I've been here for 3 cycles. So having been here for 3 cycles, I kind of have an idea of what's going on in this market. And I think that I'm really in touch through the good researchers that we have and the morning calls that we have and all the insight that we get. I think I've got my eye on the market. And so despite the amount of hate and despite people telling me that I must change my view and that my view is wrong, I kept my conviction, and my conviction actually landed up paying off. And I'll show you exactly how much it did. If you guys are in the comments and you were the people that told me, so Elliot J says, run is the new Jim Cramer. Guys, carry on. At the end of it, we'll see who came out. I think so far a lot of people have basically changed their tune. Anyway, we got the leverage flush as we predicted, and the question is whether this is the end of the dip or whether this is the beginning of a dip. And I want to show you what I think is going on in the market and why I'm not convinced that it's time to start deploying cash. I'd started deploying some cash very, 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 very slowly, but I don't think that this is the right time to be deploying deploying a lot of the cash. And I'll show you what it is that's actually worrying me, because there's something structurally in the market that's worrying me, and it's actually not the leverage that's worrying me. It's something completely different, which I want to share with you guys today, which I think is a big market concern. In fact, it's such a big concern that is what prompted me to go onto Frontrunners quite late last night, about 10 p.m. last night, my time, 10:15 my time, and to tell people, look guys, I'm bullish, but I'm starting to get into cash. And I immediately sold a lot of positions and landed up, I'm about 22% in cash now. I'm about 22% in cash. And that was up from like 17 or 18% yesterday. So I quickly went 5% more into cash. And I'll show you in a second why. Because that is, I think, what the reason is for this market turbulence. And it's not what you think. So it's not what you think. All right, so let's go. But remember, if you're not already subscribed to the channel, we have grown a lot. We grew about 2,000 subscribers since yesterday. Subscribe. There we go, another 1,000 subscribers. Keep subscribing if you are here and you enjoy the content. And if you landed up being saved, or if I landed up saving a lot of cash yesterday, smash the like button. Smash the like button. Because I think today's gonna be an even bigger show. So let's go into it. Let's look at what actually happened yesterday. What was it that prompted me to go into Frontrunners as 1 hour before the dip, and to say, guys, accelerate going into cash as quickly as possible? Because the reality is that what I did was I did some maths. And when I did the maths, I was like, hold on a second. If I add this plus this and this plus this together, this does not make sense. And so what I decided to do was I decided to pivot into relatively bearish in the short term. In the long term, nothing changes in my thesis. In fact, I'm more bullish than ever. And I haven't touched my long-term portfolio, but where I had unnecessary leverage, where I have unnecessary leverage, where I'm holding on to positions that I'm not that convinced about, what I did was I actually pivoted the other way, and I went short. So you can see that I've taken now actually very recently a short on 𝗕𝗢𝗘, quite a big short, $500,000 short on 𝗕𝗢𝗘, and I'll show you in a second why I've done that. I took that short on RSR. I closed half of it at $59,000 profit. Half of it is still riding. And I've still got my short on XRP, which is now, you can see I've taken $2,698 profit. I've got $26,000 in profit still to take. And so the question is, what is it that made me turn so bearish? As I said to you, it's something to do with the market structure. Ironically, it wasn't about Google's quantum computer, even though the news of Google's quantum computer came out yesterday. And this is the CEO of Google and Alphabet. He says, introducing Willow, our state-of-the-art quantum computing chip with breakthrough that can reduce errors exponentially as we scale up more qubits, cracking a 30-year challenge in the field. In benchmark tests, Willow solved a standard computation in less than 5 minutes that would take a leading supercomputer 10 to the power of 25 years beyond the age of the universe. So it actually wasn't about quantum computing. Now, a lot of people want to know why quantum computing is so dangerous for crypto, because if we have quantum computers and they can solve mathematical problems much quicker than ordinary computers, eventually they'll be able to crack your private keys. And if they can crack encryption such as your private keys, then eventually your private keys aren't going to be safe, and that will make your crypto pretty much worthless. But the reality is that we're very, very, very far away from quantum computing that can compromise Bitcoin's private keys. It is interesting to hear that they're making good advances in this space. I think that's super, super interesting to hear. But the reality is that there's a good couple of years, a lot of years, before they can actually crack Bitcoin private keys and stuff like that. And that's why I think that Bitcoin monetary system is still safe for the next 20, 30, 40, 50 years. I don't think that money systems need to last more than 20, 30, 40, 50 years. In the old days, money systems used to last about 100 years or maybe slightly longer. But remember, in the old days, we didn't have technology, we didn't have the internet, and we didn't have the AI and the technology that we've got at the moment. And so I think that monetary systems are going to come and go much quicker, which is why I think that the age of Bitcoin and money that is secured by cryptography is probably only here for another 20, 30, maybe 40, maybe 50 years, but certainly not for 100 or 200 or 300 years, because then quantum computing is going to resolve things like that. So what we had yesterday was we had a leverage flush. We did have a leverage flush. Ironically, I don't think the dip was about clearing leverage, because if you remember on yesterday's show, when we looked at the leverage had already reset. Yes, now the leverage is much, much, much more reset. I mean, just look at the greens here. If we go into the actual leverage over here, you can see that, actually, let's go into this chart over here. You can see that the leverage rates are now like pretty low. Like taking a 1-year leverage position on ETH it will cost you 10.95%, which is actually very low for taking leverage on ETH. So you can see the leverage rates have now completely reset to 10.95%, which means that they're pretty much at the standard leverage rates. It was a massive leverage flush out, but I don't think this was caused because of exuberant leverages. In fact, if I look at the leverage, the last time that we had a leverage flush out that was this big was actually in September 2021. So that is when the last time that we had a leverage liquidation event as big as the one that we had in the last 24 hours. And now what you can see is that the total leverage in the market has dropped by 25%. The rates have completely reset. It's now very, very cheap to borrow. So it's quite cheap to borrow against your or to take leverage. And so I think now there is a complete leverage reset. But that is not what's worrying me. In fact, before I talk to you about what's worrying me, I want to just say for the record that my long-term portfolio is untouched, and my conviction in the space stays exactly the same as my conviction in the space has been. In fact, I've never, ever, ever had more conviction than I have at the moment, right? And the reason why I have the conviction, of course, is because we have moved into an era where we've got a pro-crypto US president for the first time in history. We've got a pro-crypto SEC chair. We've got a pro-crypto treasury secretary. We've got a pro-crypto crypto czar in the White House in 𝗕𝗢𝗕𝗙. We've also got many presidential candidates talking about a strategic reserve in the United States, in Poland. You've got China increasing or loosening monetary policy coming up. You've got the US reducing monetary policy. You've got the US talking about a Bitcoin strategic reserve. You've got Russia talking about creating a strategic Bitcoin reserve. So, and you've also got like Microsoft and potentially Amazon being pitched on Bitcoin, even though I don't think that they're actually going to buy Bitcoin to put on their balance sheets. Now, I do think that they're being pitched on Bitcoin, and even just that, you know, between Microsoft, Amazon, eventually one of these companies is going to buy it, and that's going to change the entire name of the game. So from a long-term point of view, my conviction in the space has never ever been higher. And the truth is, if you're a hodler and you're holding right now, then this is the best time to be holding. Like honestly, if you're holding, you can chill. You don't have to worry, because this is honestly the best time to be holding Bitcoin. But in the short term, there is something that's worrying me, and I want to show you what it is that's actually worrying me. And I don't think I'm the only one that it's worrying, because if I look at the long-term holders have sold just under 1 million Bitcoin in the last 30 days. And generally what we know is that the long-term holders sell their positions when they slightly more worried. J.M. Martin says this is the Bitcoin top. The quote tweeted the exact bottom since so basically he's gone and he's looked at the long-term holder positions, and he's realized that when the long-term holders actually start releasing their coins, that is usually a top. And that's exactly what happened. And that's when we got the top, or the local top. So let's talk about what's worrying me. What's worrying me is this. It is the micro strategy buying that's happening on Bitcoin at the moment. We got another announcement yesterday. We've had a series of announcements in the last couple of weeks with 51,000 Bitcoin, 15,400 Bitcoin. We got an announcement of around yesterday, I think it was 21,550 Bitcoin at 2.1 billion. And it really feels like MicroStrategy is buying every single week and is buying billions and billions and billions of dollars worth of Bitcoin. And so when I saw the announcement yesterday, that's when I actually started stressing about the Bitcoin price. And I'll show you what it is that stressed me about the MicroStrategy buying Bitcoin. So I went to the Bitcoin chart, and I effectively broke the Bitcoin chart into two parts. I broke the Bitcoin chart into 2 months before the election. Then over here, you have election day. And then I've taken the 35 days after election to get us to where we are today. And then what I've done is I said, I want to analyze the MicroStrategy purchases before and after the election. And I want to analyze the ETF purchases before and after the election. So then the researchers did a spreadsheet. Hold on, let's just refresh it. And we looked at MicroStrategy. In the 2 months before the election, MicroStrategy bought 25,720 Bitcoin, where the ETFs landed up buying 89,901 Bitcoin. So just keep looking at these numbers. After the election, and that was in a 60-day period before the election. At the same time, 27,450 Bitcoin were actually mined. Then, after the election, which has been 35 days, we've had 100, let's just quickly just put that in for people who are watching, just so we know that that is when it was done. So 35 days. After the election, in the 35 days after the election, MicroStrategy 5x'd their purchases in 35 days to 171,430 Bitcoin, while the ETFs increased by about 10 or 50, by about 15 or 20%. And the ETFs are at 105,827. So what you can see is that since the election, there's been a massive increase in the amount of Bitcoin that MicroStrategy purchased. In fact, today, MicroStrategy own 2% of, or 2.02% of the total Bitcoin that will ever be in existence. And they will never, ever sell them. Well, according to MicroStrategy, they will never, ever sell them. So then I went and I analyzed what happened 2 weeks before. So if I look at 2 weeks before the election, now granted there was a new government and whatever else, but that's 2 weeks before. That's 2 months before. The price went from 59,000 to, when we got to the election, it got to 67,000. So you had an increase of $7,650. And that was effectively on the back of 89,000 Bitcoin bought by the ETFs in that 2 month period and 25,000 Bitcoin bought by MicroStrategy in that 2 month period. Then we had the election. In the election, obviously the regime changed. We became much more pro-Bitcoin. We became much more pro-Bitcoin. We became much more there was the political mood in the United States changed. Let's just call it that, and it became way more bullish towards crypto. And then in the 35 days since the election, if you look at the price just at the election and you look at the price 35 days afterwards, we had a 45% increase in Bitcoin, or you had a $30,000 increase in the price of Bitcoin, right? So remember, before the election, we had a $7,000 price increase. And then after the election, we had a $30,000 price increase, which is about 4 times the difference, right? So the increase from here, from here to here was about $8,000. And if you go from here to here, it was about 4 times that, right? And then we go back to the MicroStrategy chart and we say, well, if you look at what MicroStrategy has done here, they've probably increased their buying by about 6 times. So like if in that number of days. And so what I realized is that, hold on a second, it feels to me like a big part of this Bitcoin price increase is actually because MicroStrategy has been buying like crazy. Okay, so MicroStrategy has been buying like absolutely crazy. And so I thought the best way to demonstrate that is to actually turn the chart upside down. And instead of a buyer, talk about a seller. And so what I did was I inverted the axis, the Bitcoin axis, and I said, if you look at this chart, and I told you that at this point here, you had a big seller, right? And the big seller was actually pushing down the price of Bitcoin because they were selling 171,000 Bitcoin. You would say, great, let them finish selling. And after they finish selling, you kind of know this chart is actually going to start turning around. And so if they continue, if one day when they continue selling or when they stop selling, the price is actually going to fly back up, right? Thing is that this chart is inverted. And actually, when you don't invert the price and you change the word buyer, here you've got a big buyer, it's exactly the same thing, right? So you've got this big buyer who's been pushing up the price of Bitcoin because he went out and he bought $17 billion worth of Bitcoin since the election. Literally, Saylor's gone out and he's purchased $17 billion worth of Bitcoin since the elections, believe it or not. And before the elections, if you look at the before the elections, he purchased like a very little bit of those Bitcoin. So this is the part that's worrying me. The part that's worrying me is that Saylor is, so let's just listen to what he said.
I've watched, we bought 200 million an hour and the price moves down. So there's someone dumping 200 million an hour. And by the way, we're never moving it up. So if we're actually...
So Saylor says, look, in the market in which he operates, in the markets where he's buying this $17 billion worth of Bitcoin, there are sellers which actually push the price down, even though there's $17 billion of Michael Saylor's money coming up, right? So if there's so much selling that is willing to happen, and you have a buyer that is willing to buy 17 billion to keep the market up, and we still don't go over $100,000, what is going to happen if the buyer runs out of steam? What happens if MicroStrategy doesn't continue to buy at the current rate of about $2.5 to $3 billion a week? What happens if MicroStrategy doesn't sustain the $2.5 to $3 billion a week? For now, what we know is that that he has been able to sustain it, and we know that he keeps buying. He's got the 42, what's it called, the 42, 21 and 21 plan, when they're going to buy $42 billion worth of coins. And so the question is, what happens when this buyer disappears? Or if you want to invert it again, what happens when this seller disappears? Well, the chart is going to turn, okay? So the question is, the thing that's worrying me, in this market structure is that this market structure is not a broad-based everybody buying Bitcoin. This market structure is largely based on MicroStrategy buying a whole lot of Bitcoin. And you may say, well, hold on, it's not only MicroStrategy, it's also the Bitcoin miners, it's Marathon, it's all those other guys. The truth is, the reason why Marathon and all the other 𝗕𝗢𝗙 and all the other miners are actually buying Bitcoin is because what the arbitragers were doing was they were going long MicroStrategy and short the miners, because that was the trade, because the miners didn't have Bitcoin on their balance sheet. But now that they're doing it, the miners aren't getting shorted anymore, and it's actually keeping their stock price up, and that's why they're doing it. And so what is my concern? My concern is that one entity has been buying Bitcoin, and when the one entity stops buying Bitcoin or slows down on their buying of Bitcoin, if the selling continues, it's going to start pushing the price down. And then the question becomes, well, how long can MicroStrategy actually sustain this for? Because that's the big question here, right? Because remember that if MicroStrategy continues to sustain this for another week, 2 weeks, 3 weeks, 4 weeks, that's great. But remember one thing, the market is a forward-looking entity. And when the market participants start to feel like MicroStrategy may be slowing down on their buying, then the market is going to respond way before MicroStrategy actually stops buying. So remember, markets are forward-looking. Markets are going to look beyond today, and they're going to look forward, and they're going to say, hold on a second. If we think that he's not going to carry on buying in 3 or 4 weeks' time, then the correction is going to come 3 or 4 weeks before the end of the MicroStrategy buying. So the question then becomes, how long do you think Michael Saylor can sustain this for? Before yesterday's purchase, they had 9.19 billion left on their 21 plan, and I think they had I think they'd spent, there's 9.1 billion on the first 21 billion or something like that. And so if they carried on like this, then effectively in about 50 days they would run out of cash. So in about a month and a half that they would run out of cash. Just think about that. So then I started digging a lot deeper into it, and then I realized that a lot of very smart people were actually like Jason, and Jason is quite smart. He says, I've never seen anything as polarizing as MicroStrategy before, except maybe the dot-com bubble, the NFT monkeys, the ICOs, Bernie Madoff. Well, let's see what happens. Maybe this time is different, right? Now, I don't believe at all that MicroStrategy is a scam. In fact, the exact opposite. I think MicroStrategy is one of the smartest things that ever happened. But what I would like to see is more broad-based market buying than one vehicle driving up or pushing up the price of Bitcoin through what I believe is rather unsustainable demand. Or, in fact, is the demand sustainable? That's what we should probably look at. So, in order to understand whether the demand is sustainable, we need to understand where this demand is actually coming from. And when you look at where the demand is actually coming from, then you actually realize that this may actually have a long way to go, right? Because where's the demand coming from? The demand is coming from fixed income securities funds, right? It's funds that usually invest in debt, and that debt pays fixed income coupons. Now, usually they can invest in treasury bills, they can invest in corporate debt and government debt, but effectively what they're earning fixed income, right? And the thing with fixed income is that we're now in a lower interest rate environment, right? Rates are starting to come down. The probabilities that rates are coming down in the next FOMC meeting are almost 86%. And so we are in an environment where rates are starting to come down. At the same time, you've got I don't know what the number is. This week you look at the numbers. You got about $7 trillion. Is this right? Yeah, $7 trillion in money market funds. Now, when the rates come down, the people in the money market funds want to try and get some returns, right? And so where do these people actually end up getting their returns? Well, they look anywhere they can. And so what MicroStrategy has done is MicroStrategy has created a vehicle where these fixed income securities people who are earning 3 and 4% now with the rate reductions can actually get some upside to the price of Bitcoin. And so when you look at this, you say, hold on a second, this can actually last for a hell of a long time, because there's $6 trillion in these money market funds, and $6 trillion is going to come looking for new yield, right? At the same time, what we heard from Michael Saylor when he was on the show, he said whenever he goes to a meeting, he goes to a meeting and he comes back with $500 million. Listen to this.
But if I'm selling you a security that's twice as good as everything else in your portfolio, how many do you want? I mean, the answer is, if you're a rich person, I mean, a billionaire wants one iPhone and one Tesla, but they would buy 100 million of your security. I had I had a meeting a few weeks ago. It was 20 minutes. And at the end of the 20 minutes, the person I met with bought 500 million of the thing, you see. And so you're not going to sell $500 million.
So what Michael Saylor is doing is he's having meetings with these money market funds. He's showing them how these guys are running around for 3% and 2% and 5%. And he's saying, look, give your money to me and you can have the upside of Bitcoin. And he shows them his track record and it's amazing. But that only holds true for as long as the price of MicroStrategy is going up. Because for as long as the price of MicroStrategy goes up, Michael Saylor can keep raising and raising and raising the conversion rate, right? And the model still holds true. But if the price of MicroStrategy starts coming down, or if the Bitcoin price comes down, then the whole thing loops and basically has to start again. And so I think in conclusion, the thing that's worrying me here is that I'm worried that a large part of this Bitcoin pump that happened between the election and where we are today. Let me just find the chart again. So a large part of this Bitcoin pump was actually as a result of one entity. And I know technically it's not one entity, because I know that the entity has just found a way to filter fixed income investors into Bitcoin, and they're just acting as the vehicle, similar to the way that the ETFs are acting as a vehicle to attract retail funds. You can't say the money comes from one entity. I hear that, and I'm fully cognizant of it. What worries me is that this entity starts running out of steam, and if he went out and said that he wanted to raise 42 billion, and he's already spent, according to me, 17 billion, then in about 40 or 50 days, if he carries on at this momentum, he's going to start running out of money. So that is the part that's actually worrying me. And I think that when the market realizes that the handbrake may go up on this thing, then the market's going to start doing a pullback. So that's the part that's worrying me. The other part is that the truth is, as I've said before, whilst other people are saying buy, and you know, this is your chance to buy the dip, I think that you shouldn't rush too quickly to buy this dip, because remember, we were actually due a correction. I said to you yesterday when we were on the show, I said, look, it's been 59 days without a proper correction. If I look at previous corrections, you know, we're looking for big corrections in Bitcoin, 27, 31, 16, 21%. And we haven't yet had that on Bitcoin yet, right? We haven't had 21% corrections and 16% corrections. Yes, we got a wick down to 90, what is it, 92, or maybe we got another wick down to 90. But that's not a real Bitcoin correction. And so at some point, we need to get some kind of real Bitcoin correction. We need a reset of the fear and greed. Last night, before all the shenanigans happened, fear and greed was at 78. I think we'll probably get to about 58, maybe 60 when this thing resets in about 9 hours. This is not accurate as at now, right? So when it comes to Bitcoin, I don't think we've had a correction yet. When it comes to fear and greed, I don't think we've had a correction yet. When it comes to altcoins, we did get a good correction. I mean, on a lot of the altcoins, we got 20, 30, 40%. On some of the meme coins, we landed up, I mean, if you look at the meme coins that are actually marked here, even like the top meme coins like Radium if you look at where it was when we marked it to where the bottom was yesterday, it went down 35%. If you look at the meme coins, which we marked over here, if you look at like things like Popcat, from the time that we actually marked it, it actually went down about 50% from the time that we actually marked it. So I do think with altcoins, we've actually had a correction. I think with Bitcoin, we haven't actually had a correction. And I think that what's going to happen is that there is a risk of a correction coming up now. There is a risk. I'm not saying that it's going to happen and it's going to happen today, tomorrow. I'm just trading very, very, very cautiously. And you can see that's what the market's doing. It's gone back into Bitcoin. The Bitcoin dominance has shot up. But even though that's happened, I'm still fully confident and convinced that when we have this correction, it's going to be a typical bull market correction. We're going to go 20% down or 15% down. We may even go down as far as closing the CME gap, which is like at about $80,000. It could get that brutal. If it does get that brutal, and regardless of whether it does or doesn't, for me, what I know for sure is that we are in alt season. So even Benjamin Khan, who's probably one of the big skeptics of alt season, he says, look, as long as the BTC dominance doesn't go back into the wedge, as long as it stays below that, altcoins to Bitcoin pairs are structurally okay. So for as long as Bitcoin dominance doesn't go back into that wedge, we're structurally okay, and we're actually in alt season. And you can see that when you look at the ETH flows, you can see that ETH flows are positive, have been positive for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And if you look at Velo data and you look at the CME open, let's quickly just go there to Velo, and we look at Velo TradFi, and you can see the ETH CME. Let's quickly go in here. And let's go to ETH. Okay, let's just try and go to ETH. There we go. And if you look at the open interest, where are the CME open interest? Hold on a second. Let's go to TradFi. So look at the CME open interest. The CME open interest pretty much at all-time highs. So that tells me that the mood is still positive. It's very much an altcoin mood. Sometimes we just need a flush out. We may have had the flush out. We may have already had the flush out. And that's why what I recommend is I've actually got some suggestions for you guys. So first of all, as I mentioned before, I think that you always must have cash in your portfolio. I've got about 20% cash in my portfolio. I may have deployed a little bit now on that Pepe short. So we'll quickly go look at that Pepe short in a couple of seconds. I've got a couple of pieces of advice for you right now. So the first thing is, what do we do now? The first thing is have a thesis and stick to it. And I'll tell you why it's important to have a thesis and to stick to it. Because the problem is that right now, there's a lot of information, there's a lot of emotions, and there's a lot of inexperienced people trying to give you information. And sometimes what you got to remember is that the loudest voices and the people with the most views, tweets, etc., are not necessarily the ones that are the most experienced. And you need to make sure that you don't change your thesis just because your favorite influencer or you watched a video or whatever else. Make sure you have a thesis and stick to it, because the hardest thing to do is to stick to the thesis, especially like now. Like you look at the market now, the market's at 97,639. And specifically, I said, I had another post in front runners where I said, look, I'm expecting a bounce now, but I'm not going to change my thesis when the bounce comes. I'm still holding onto my cash because I think we're going to get a lot lower. Next thing is, if you are a hodler, in other words, if you're just buying Bitcoin and just buying ETH and you're holding till the end of the cycle, hodl. There's nothing wrong with the market structure. We're still in a bull market. We're going to be in a bull market for at least the next 4, 5, 6 months, as per the show yesterday. The idea is to say, look, if you are a hodler, if you're not trading, if you're not one of these people that's looking for entries, if you're not trading in and out, then you're great. Like, just hold. Nothing's going to change. We're still expecting $250,000 in Bitcoin. We're still expecting $10,000 in ETH. We're still expecting $1,000 on Sol, right? The next thing is have a buy list ready. And I tried to push you guys to have a buy list ready about 2 weeks ago, because what I know is that volatility breeds bad decisions. In periods of volatility, you're not making good decisions. And that's why I always recommend that you have a buy list ready before the volatility actually comes. Now, I have a buy list that's ready. And to be honest, I'm not ready to pull the trigger yet, but I'm very different from a lot of people, and we'll talk about that in a sec. So have a buy list ready, and remember that if you're making a buy list, in periods of peak volatility, you're probably making some really bad decisions, right? And the idea is to have your buy list ready. Okay, next. So now you've got two options. If your thesis is that this is the worst of it, I don't know, maybe you're right, maybe I'm right, maybe Josh is right, maybe Sheldon's right, maybe who knows who's right. If your thesis, remember, it's all about having a thesis and sticking to it. My thesis is that there's still another leg down. I'm willing to wait on that leg down and sit in cash. But maybe you're not as invested or as exposed to the altcoin market as I am, right? And if you're not as invested, you may want to get in and you don't want to miss these the upside. And so if you're not invested, or you're not as invested as I am, and you don't want to miss it, and you think that these entries on altcoins, which have come down quite a bit, it's hard to say they come down quite a bit. You got Aerodrome still up 21% this week. You got Curve still up 30% this week. If you believe that this is enough of a correction and you don't want to take the risk that this market's going to buy, then what I would recommend for you is to actually start DCAing into alts now. And what I would recommend is to say, if you've got 100% of your money to DCA into alts, just for the next 4 weeks, put 25% a week, close your eyes, doesn't matter about the price, and buy into your buy list, right? For others, people like me, be patient and stick to your thesis. And so my thesis is that we're going to get a correction. I'm patient. I'm holding my money into cash. And the reason why I'm so comfortable to hold my money in cash is because I've got so much exposure in my long-term portfolio that if I miss some short-term gains, I'm okay with it. I'm okay with it, right? And so you have two things. Either you can start DCAing now or be patient. Just be patient and wait for your thesis to play out. And you know what? You have to also take the risk that if your thesis doesn't play out, that you'll end up with some extra cash, which you may have to deploy later at higher prices, or will never get deployed. You can just cash it out. All right, next thing. Put in some stinky bids. Because I know like people in Frontrunners and Kapoor and a whole lot of others, they put in some stinky bids. And a lot of people got a lot of great buys yesterday. Just look at this. Radium, even though it closed at $4.40, it went all the way down to $3.95. And that's, if you look at that came from a high of $6.49. So radium was about 45, almost 50% down, right? So if you want to put in some really stinky bids, specifically where I think you should really put in stinky bids is the meme coins, because the meme coins will drop a lot, right? So you can see like the meme coins here, like the meme coins 52.75%. So you could have put in a stinky bid at when PopCat was at $2, you could have put in a bid at $1, and hell, you actually would have got it. And so take some tokens that you like, put some stinky bids, and whatever happens, happens. Maybe you'll get them, maybe you won't. Just make sure that when you change your mind, that you cancel them. Because once what I did was I actually put in a bid on Bitcoin at like $10,000 when Bitcoin was trading at like $30,000 or something. And then there was a wick on the exchange, and I actually landed up getting getting my Bitcoin. So put in stinky bids. It's actually a very good thing. Okay, now the last strategy is not for the faint-hearted, and certainly not for anyone who doesn't know how to trade with leverage. So listen up. This is what I did, and I'm not recommending that you do the same, but in the interest of transparency and honesty, I'm going to show you exactly what I did. So what I did was I kept my long-term positions open, right? Because in the long term, I'm really bullish on this ETH run. I'm really bullish on Curve. I'm bullish on Blur, which is NFTs. I'm bullish on ETH. I'm bullish on Lido and the Curve ecosystem and stuff like that, right? But in the short term, I think there's going to be a correction. So what did I do? I landed up taking positions to hedge my position. So for example, on my ETH position, I took Pepe, which I thought would be the most reflective ETH token. That plan maybe went a little bit south when Elon keeps tweeting Pepe. That doesn't help me when Elon keeps tweeting Pepe. But what I did was I took a meme coin on Pepe that hadn't dropped, and I took a $500,000 short there, right? And the reason why I did that was because I said, look, maybe my ETH will come down, but then so will my Pepe, and I know Pepe is going to be super reflexive. And the same thing, I kept my RSR short open, right? And I said, look, I'm going to probably lose some money in the short term on Lido and Curve and stuff like that because the market's going to go down. But what I'm going to do is I'm going to take a token that's very, very, very overextended, and then I'm going to take a short on it. And the reason why I'm going to take the short is because this token is completely overextended. I think it's going to come down the hardest, and it did. You can see I've made 59,000 already cashed and 57,000 still here. And the same thing I did with XRP. So with XRP, like what I said is, I'm so bullish on many tokens, but the one token that I'm not bullish on is XRP. And so what I did was I took the short on XRP to hedge my portfolio, and I kind of said, look, these XRP guys, when the market really starts to capitulate, the XRP guys are going to capitulate first, right? So that is what I landed up doing. I landed up taking shorts to hedge my portfolio against the longs. I ended up also closing unnecessary leverage. But that's another one of those strategies. So quickly, just to summarize what I did. Number one, I have a thesis. I'm sticking to it. My thesis is another leg down. I'm not going to get shaken by this recovery. Maybe I'm right. Maybe I'm wrong. If you're a hodler, and I do have a hodl portfolio, I'm just holding. I've got a buy list that's ready. And tomorrow we'll actually talk about buy list. So tomorrow is all about a buy list. Someone says, telling us after the event is slightly dubious. Sheldon did the opposite. I know who I believe. I think Sheldon and I did exactly the same thing. Just Sheldon is deploying sooner than I am. We both called for the correction. Sheldon is deploying sooner than I am. I'm not deploying yet because I just think there's another leg down. That's the difference. I'm DCAing. I'm not DCAing into altcoins yet. Nothing's cheap enough for me to actually be horny enough to go and buy them. I'm going patient. I've got some stinky bids in, and I've got some leverage on. I've got some leverage shorts on overextended coins that I think are actually going to at some point rip, and time will tell. And I'm managing these shorts very, very, very carefully. Like for example, if I see Bitcoin go back towards the $100,000, then I may consider actually closing that short and saying, you know what, bad trade. I made $100,000 on RSR. I can afford to close. I can afford to close that short. So that's the strategy. That is the concern that I have. Remember, if you like this content, of course, just give us another like. It helps us get distribution of us. I want to remind you of a couple of things. So I've got the Christmas boxes here with all the cool prizes in them. Okay, this one's got a set of AirPods in it. And I just want to see what would have been in the boxes today. I want to show you what would have been in the boxes today. This one was $10,000. And this one, oh, for fuck's sake. I mean, you get a banana. So the truth is that I could have started this today. The problem is I don't have all the UIDs from all the exchanges. Justin's son also ate the banana. And I didn't have lunch. I didn't have lunch. So I think we'll start the boxes tomorrow, which gives you one more day to go and sign up to any one of the exchanges. Sign up for the exchanges. If you signed up since we started this promotion, sign up to any one of the. Between now and Christmas, every day we will draw some boxes. We'll open a box, and if it's your UID, you'll win whatever is actually in the box. So that happens on Bybit, BitGet, and Blowfin. Do that as quickly as possible. Also, I want to talk about two other things. One is Bitfunded. So remember, this is the best time to get into Bitfunded and trade with other people's money. This is a platform which allows you to trade with other people's money. You buy a challenge for $99. If you get 8% in the first stage, 5% in the second stage. In the third stage, you're trading with other people's money and you get to keep 90% of the profit. So you're basically trading risk-free with other people's money. So if you think you're a good trader, that's amazing. Lastly, I do want to talk about one of the things that I saw when I was looking at the bubbles is that certain bubbles, let's just go on to daily. So that certain bubbles were really, really, really performing today despite the downturn. And one of the ones that actually performed very, very well despite the downturn is Clearpool. So I figured it's probably a good time to talk about them because it shows that there is a narrative of real world assets and there's a narrative of relative strength tokens. And Cpool or Clearpool is one of those, right? Now, why? Because they are a real world asset marketplace. They start off as a credit marketplace, but they also built a blockchain for real world assets and real world asset yield. And so this is one of the tokens you want to look for tokens that perform well on the bad days. And that could show you where the new narratives are. And this is one of those ones that actually happen, that is actually doing well. So I encourage you guys to go and have a look at it. We'll do a whole show on real world assets. And we can do a deep dive into that. Have I missed out anything, Josh? I haven't. I've covered everything. Except for win a Bitcoin. Okay, Josh is asking me to remind you guys that you still have a few more days if you want to win a Bitcoin. All you need to do is you need to go here. You need to predict the price of Bitcoin at the 1st of January 2025. You need to put in your prediction. So let's say my prediction is 100,000. Is that a million? 100, 1, 2, 3. And then put in your Bybit user ID, or if it's Blowfin, put in your Blowfin user ID. And then you press the button, and then your prediction goes onto the platform. And if you are right, you will end up winning a Bitcoin. So, I mean, it's every account gets you 5 opportunities. So yeah, every account gets you 5 opportunities to actually do this. All right, fam. I hope I managed to save you guys some money for those that actually took the advice. I do think that it's probably a good time to start DCAing if you're out of the market. Otherwise, if you're trading, I'm not really trading, but if you are trading, trade well, my friends.